Hey gang, here's Simon with your daily video newsletter for Monday the 15th of April 2024. So last week saw the return of some volatility to the S&P. The S&P was down 1.5%. It's not a huge deal, but it's the most downside volatility we've seen in the S&P since the start of the year. Now obviously geopolitical risk has reared its ugly head again. And as ugly as war is, geopolitical risk, it's nearly always more bark than bite as far as financial markets are concerned. Yes, you'll often get an initial fear reaction, but very often the stock market will just kind of go back to doing whatever it was doing before once it digests the news. And ordinarily, war-type headlines would create a buy-the-dip sort of opportunity in a strong uptrend. So does buy-the-dip, is that going to work again here? Well, looking at this chart of SPY, this is the ETF that tracks the S&P 500, I would say it's at a make-or-break level here, because it is sitting right on its 50-day moving average, and this grey line here just represents a line of historical support that has held for the last few weeks. And bear in mind, the S&P has been chopping wood for 5 weeks now. The Nasdaq here looks kind of similar. So if we check out the Nasdaq, you can see it is also flirting with its 50-day moving average, and we've got a real compression in volatility here. All right, Nasdaq has been chopping wood for 7 weeks. It's gone nowhere for 7 weeks, and there's a big move coming. We just don't know yet whether it's going to be up or down. Now, if we look at the Dow, the Dow's a mess. All right, we've completely broken trend structure here. And honestly, the Dow has transitioned from a buy the dip to a sell the rip type of environment. So if the Dow is prologue for what's in store for the S&P and the Nasdaq, you'd want to be very cautious about buying the dip right now. Now, if you told me that inflation data was going to start reaccelerating and yields were rising again, I would have expected the Dow to outperform the Nasdaq, but clearly that's not the case. So key thing to watch here, if we look at the S&P is up 7.5% year to date. If we look at RSP, which is the equally weighted S&P, that is up 2.5% year to date. All right, so the mega cap stocks really are doing most of the lifting here. And in fact, if we look at a chart of the Magnificent Seven, this is a weighted chart of the stocks that comprise the Magnificent Seven. That made a new all-time high on Thursday, all right? So this is looking much, much stronger than any of the other indices. So the big question here is, can the Magnificent Seven hold things together long enough for the rest of the market to kind of shrug off geopolitical risk and resume the uptrend? And let's face it, there's more than just geopolitical risk here. They've got to shrug off higher rates and higher inflation. Or will the Magnificent Seven succumb to the pressure we're seeing in the rest of the market? Now, look, if I knew the answer to that, I promise I would tell you. And this is just a development we're going to have to watch over the next couple of weeks, particularly as these mega cap tech stocks report their earnings. That's what I got for you today, folks. I hope it helps, and I'll catch you tomorrow.